What's going on YouTube? Millennial Trader here from the Millennial Trader YouTube channel. Today is December 4th, 2024, and congratulations, Bitcoin bulls, we've breached $100,000. In today's episode, obviously, we're going to talk about Bitcoin having surpassed $100,000, where I think it's heading to next. I'll give you a market recap in terms of overall market sentiment with the greed and fear index, talk about the Bitcoin dominance chart. Obviously, I'll do a little bit of technical analysis in terms of Bitcoin using the DeMark indicators, as well as utilizing Ichimoku clouds and some of the more traditional technical analysis tools that I've been previously talking about in past episodes. We're going to take a look at the Bitcoin relative to Ethereum chart and see where the charts are suggesting the overall outperformance may be. We'll take a look at Ripple, see what Ripple is doing while Bitcoin is at all-time highs, and then lastly, I'm going to take a look at Solana, and that kind of caps out the top four coins in the space. And I'll give you my thoughts in terms of where I think that's going over the next little while. So with that, let's get right into it. All right, so I generally like to look at the coin market cap crypto fear and greed index, as it gives me an overall picture in terms of market sentiment as to what where the emotions are currently with investors and traders in the crypto market space. And so right now, we continue to play within the extreme greed area. The last episode, we were on the cusp of potentially falling back down into the greed area, which, in my opinion, isn't necessarily a bad thing. Generally speaking, we don't tend to stay within the extreme greed area for an extended period of time. But having said that, certain conditions may cause us to be here longer than anticipated. Obviously, with Bitcoin having surpassed $100,000, we've pretty much just shot right back up into the extreme greed area. But that's not to say, and interestingly enough, we're not testing those extreme greed all-time highs that happened back in, let's see, March March 2024, where we hit 92 on the index. So, we're about 7 points away from that all-time high level. It at current market, at least at the current phase of the market, it wouldn't surprise me if we go and retest that area. And that would kind of generally line up with where I potentially see Bitcoin pausing and consolidating, or potentially being the turning point to start looking in the opposite direction of the trade. So we'll take a look at that in a little bit, but like I said, for now it's a bullish market. You want to continue to be long Bitcoin and generally most of the major coins. Any dips are essentially buyable dips, and I would say you're, at least in the current space and in the current environment, you're in a more forgiving um, you're in a more forgiving trade if you don't get the perfect price to buy in at. Chances are you probably get saved because the overall market sentiment is bullish, and chances are the price at which you bought, you'll end up being able to sell it out at a higher price. But you know, I'm I'm still cautious just because some of the signals that I'm seeing in the charts suggest to me that we could be in an area of potential consolidation or a potential area to give back some of the profits. So we'll see how things shape up over the next little while. But if you're going to be the one to kind of average in, you want to pick and choose your levels because I think over time you'll end up further ahead. But just know that any potential purchase, any new entries could potentially put you in a little bit of a negative position until it the coin kind of digests the demand and continues to push the supply up higher. All right, so Bitcoin dominance. So, so again, Bitcoin dominance is basically just the a measure used to measure the relative market share of Bitcoin in the overall cryptocurrency sector. So, I would say it's primarily, I think of this as a tool to indicate, okay, where are people allocating capital currently, and uh, primarily, historically, it's always been Bitcoin as the more dominant coin that people and traders and investors generally gravitate to because it's the oldest, it's the most valuable in terms of market capitalization. There's a lot more proven papers on its utility and things like that. So generally speaking, uh, we're always going to have Bitcoin dominance, but it's just really taking a look at the change in the dominance over time. So right now we're at 55.7 with Ethereum being number two. That makes sense because Bitcoin and Ethereum are the two most valuable coins. And then coin market cap just kind of divides all the other coins within a separate category as other. And, right now we're generally speaking, Bitcoin dominance is usually within on average, because obviously there's some more significant dips, but on average, the Bitcoin dominance is somewhere between the 50 and 60% range historically. If I'm looking at all the the chart using the all time range that Coin Market Cap has been tracking it. Obviously, the dominance, 2013 was primarily Bitcoin because that was one of the only coins available at the time, and as cryptocurrencies got created and availability started to come online on the exchanges, people had um, more ability to kind of diversify and try out other coins and things like that. So that's why you'll see the dip, and periodically it comes down. And obviously, right now we're in a phase of strengthened Bitcoin dominance just because of um, the overall marketplace and the overall sentiment and the continued the continued narrative that Bitcoin is the dominant and the cryptocurrency that you want to continue to hold for the long term. And right now we're at 55%, so we're roughly within the middle of the range of 60 to 50. So there's no glaring issues at the moment, but like I said, we generally don't tend um, to be at the extremes for too long. Topping out at 60%. So over time, we've kind of been slowly backing off from all-time highs, at least for this particular year, for 2024. So we'll see how it plays out. It's still a bull market in the crypto space. I continue to think that the crypto space will be the next frontier in terms of generating alpha, being a potential hedge for stock market volatility, potentially as regulations become more the norm. This might be a new window of opportunity for the financial institutions or a lot of the hedge funds to kind of play in this arena and generate some kind of return or other strategies in the marketplace that generally weren't available um, pre pre Donald Trump inauguration coming in January of next year. So nothing glaring, just obviously noting that we're starting to back off the Bitcoin dominance. Some of the other coins are starting to have favor. The volume and the overall market capitalization of those coins are collectively starting to increase relative to Bitcoin. So it makes sense. It makes sense that the altcoins or the shit coins or the meme coins, people are starting to dabble in that area because the percentage returns will likely outperform Bitcoin, just because you probably need a lot less dollar volume to move directionally um, those market capitalizations relative to Bitcoin, because you generally don't get $10,000 moves on a daily basis for it to have a meaningful impact in Bitcoin right now. Considering that we were playing within the $90,000 to $100,000 range, you don't get 10% moves historically. Those are typically infrequent, and that same uh, dollar volume, excuse me, um, can be can move coins significantly in the altcoin space. So I'm keeping an eye on that. It's still a bull market. The altcoin season that people generally talk about after the run up in Bitcoin is here. I see it every day with coins moving 10, 15, 100% in some cases on the really small market cap coins. But again, you have to be able to withstand that volatility in order for you to make those kind of significant returns. So nothing glaring. Bitcoin dominance is roughly within the middle of the range. Ethereum, kind of again stuck in the middle of the pack. I'm not too concerned with it or any of the other coins in the space. Obviously, you're going to get some red herrings with some of the other coins because they may be pump and dumps, but whatnot. But the major coins, I don't see anything glaring at the moment. All right, let me bring up my chart here. Give me a second. Okay, so over the past couple of episodes, I've been talking about how Bitcoin was in this consolidation phase. We got this run up leading into the inauguration of Donald Trump as the next or the incoming president, and now after having completed a DeMark 13 countdown signal, we are also at the completion of a combo 9 signal, which is a sister model to sequential, and the counts uh, the, they're both momentum and trending indicators, but combo counts, the way in which combo counts is slightly different than the way in which sequential counts. But in effect, they just give me uh, they'll give me confluence of signals as to whether or not I want to be what I want to be long or short the market, or if I see any potential reversal patterns that may make me want to either lighten exposure or potentially go short. But obviously, as I mentioned previously, it wouldn't surprise me to get some kind of consolidation, um, and we might play in and around with this area with this trend line that I previously drew. Obviously, right now it's a bullish candle, but we'll see how long that lasts. It might come back down to retest it and then ultimately come back up and test this 107 propulsion uh, full exhaustion level that I had previously mentioned in my last episode. And the propulsion indicator is basically measures the thrust of the market um, in a particular direction. Obviously, there's a couple of other lines. So this is the the propulsion exhaustion level, and so essentially it basically says that once we've moved in a direction long enough and we close above a certain level, assuming that the trend continues, we would ultimately reach the next propulsion level higher. And the calculation of how these levels are determined, I'm not going to get into the specifics. It's kind of also my competitive advantage in terms of how I look at the market um, to suggest certain things to some of my newsletter clients. Whether to enter into positions or exit positions, or why I believe we'll end up hitting certain targets just based upon the movement in the particular stock or security or cryptocurrency. So right now, like I said, it wouldn't surprise me if we get to this 107 level, 107,425. We're currently after this combo 9 completion. We're in the process of completing um, combos. We're actually in the process of completing another sequential 13 count, because essentially from after the completion of every 9, then that 9 is entitled to its own 13 count, and if it just so happens that another 9 sequential 9 count develops within that previous 13, then that 9 count is also entitled to its own 13. So, we're like I said, we're in the process of completing a 3 of 13 count. So, we could potentially just consolidate in and around this area before we ultimately reach this 107 level. So we'll see. But um, from my point of view, there's nothing to suggest that we won't get to this 107 level um, sometime this month or early into January, when Donald Trump is sworn in at the inauguration of his presidency. So, congrats to all the bulls. Clearly, if you got in before the election, you've made about $40,000 profit. So, congrats. That's a magnificent gain. I'm not leaning bearish in this particular market. Yes, you may be able to play for, a very short term short, but you're kind of playing with fire, and you're risking more being short than the potential gains of continuing to be long. So um, for me personally, I don't think I'd be putting on any new exposure to Bitcoin. Again, just because the way in which uh, the sequential model was developed suggests that upon the completion of a 9 and 13, it's generally speaking a very bad time to be putting on new exposure, because there is the potential for drawdown. Drawdown meaning, that there is a potential for that candle to potentially reverse course, consolidate for a little bit, or ultimately be the topping point in a particular time frame. So for me, I would much rather put on new exposure in and around this 90,000 to, let's see, what is this? Anywhere, yeah, I'd say anywhere in the $90,000 range. That's probably where I'd want to put on new exposure. Obviously, again, we went to 104,000, so congratulations if you literally sold at that peak. But we're coming down from it slightly. No real red red flags. It wouldn't surprise me if we come back down from all-time highs to retest sub 100,000, just to really, right at this point in time, it's just really confirming whether that $100,000 um, price sticks, and whether there is continuation. But again, for me, if I have to stick to what I generally believe, and in terms of the model, and why I value it so much, the timing mechanisms suggest to me that putting on new exposure at the moment is kind of high risk. So I would much rather wait until it comes back to about 100,000, 90,000, and be a place for me to buy that dip. Coincidentally, what one of the beautiful things about this model, both the sequential and the propulsion indicator, is that there are hidden levels that you don't generally see using other indicators or proprietary um, tools that the DeMark indicator shows as areas of support or resistance. So for me, you know, the model has existed since the 1970s with very minimal tweaks that I trusted enough because of its objective nature, and the way in which the model was developed, and the timing mechanism of it, that it's right more often than not. So that's just my interpretation. It's still a bull market. $107,000 is a target area for me as to where I ultimately see Bitcoin going. There is a higher one up here at 111, and we'll see if we get there, but we're getting closer to the completion of the combo 13 countdown that I don't think we'll get there, but 107,000 is an area, is a target area that I'm looking at as a potential for Bitcoin to ultimately reach before year end, or um, when Donald Trump is sworn in as the new president. All right, so the next one that I want to take a look at is Bitcoin relative to Ethereum. Give me a second. All right, so in the last episode, I previously mentioned that, again, this model's, I love it for the fact that I trust it instinctively because of how good the model is at predicting turning points. Obviously back here in October of 2023, a sequential 9 showed up, and obviously we got we pretty much consolidated for the rest of 2023 before we ultimately pushed back down in terms of relative outperformance of Bitcoin to Ethereum, and before we ultimately completed the 13 count, we 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 shot up a little bit, but essentially we came back down mid 2024, and then ultimately uh, Bitcoin's relative outperformance started to occur middle of June 2024, and now we're seeing that continued outperformance. And I have the two models, both combo and sequential, being shown right now, where they're basically showing me that they're topping out at the same areas with a 9 13. We just completed a combo 13 earlier last month. We're in the process of completing a sequential 13. So you know the, it, we don't necessarily have to complete the countdown, but and obviously we have a price flip here where we've moved enough in one direction that the close is now while we're still in a bullish pattern, it doesn't necessarily mean that we can't start to roll over in terms of Bitcoin's relative outperformance. But it's something that I'm watching. We've breached this hidden support level that I would have looked at in terms of if we're in a bullish direction. This is the first area that I'm looking at to see whether or not we'll reclaim it, or we subsequently reject from it. And if we reject from it again, then that gives me more indication that Ethereum is most likely going to outperform Bitcoin over the next several weeks into 2025. But so long as we are higher than this 8 count, we can ultimately complete the 13 count. Um, and as long as we're high, I mean, in 2 weeks from now. So the way that the 13 count um, is determined is that it looks back from the current candle. It looks back um, two candles before, and so long as the current candle close is higher than the low 2 candles prior, then it'll ultimately complete um, into a 13 count. So, excuse me, yeah, it'll ultimately complete. So something that I'm looking at, we're still in a bullish setup. Obviously, the count is repeating, but we'll see. We'll see where if this 9 count continues or not. But obviously, we don't have a 13 here because the candle, the close, is lower than the close two is yeah lower than the low 2 bars prior. So that's why the 13 doesn't count. You'll probably have to wait until the following week for the 13 to ultimately show up, which um, would make the count complete because we also have to be higher than the 8 count. Again, there's nuances within the model itself that a lot of coders have tried to code the formulas, but they get it wrong because there's so many nuances that you really have to understand the model, and you really have to find the one sole document on it to really understand how to use it. And what I will say is this model is used by uh, a majority of the trading firms, the Wall Street firms, the financial institutions, um, because of how good it is, and because of the utility of it, that it's something that you know the 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 retail community doesn't have access to it. And if you wanted to use this platform, you have to pay a significant price every month to be able to utilize the indicators. And for most people, it's not worth it. But if you have significant capital at risk or that you're invested in, it may be highly to your advantage to seek it out and understand it further. If I put on the Ichimoku cloud, obviously we topped out. We breached this uh, propulsion exhaustion level, came back down. Potentially this might be the start of a head and shoulders pattern, in which case, as I mentioned previously, that's where I potentially see Ethereum outperforming. And it's also, from my point of view, it's also why I'm actually positioning myself to scale into buying Ethereum versus Bitcoin, just because it takes a significant amount of dollar volume and liquidity now to move Bitcoin, um, you know, 10% in a day, whereas that same dollar volume uh, has a significantly more um, has more impact in Ethereum or some of the other coins. So for me, it's still a bullish market. You still want to be, if you're a long-term investor in Bitcoin, then continue to buy it on the dips at least for now. But from a timing mechanism, um, I think there are potentially other cryptocurrencies that have potential for relative outperformance now, at least after Bitcoin having moved up so significantly. So that's why I'm looking at some of these smaller coins. Okay, so Ethereum had a massive move pretty much since the beginning of November all the way up until today. And after Bitcoin having moved up, to $104,000 today, Ethereum is the one that's kind of pulling back. This candle right here, to me, looks like some profit taking, some potential short selling. Um, but overall, this has just been a massive move. So if you've been long Ethereum since the beginning of November, congratulations, because you've moved up, 400%, 476%. So congratulations. Again, the I continue to harp on the fact that the DeMark indicators are so useful in that in a sideways market, you won't be able to see any particular trends from your traditional indicators like MACD or RSI or stochastics, whereas the DeMark indicator will. And specifically, if you're using sequential or combo, so long as the price, so long as there is movement in the price, you'll continue to develop this output of 9 and 13s. And obviously, had you looked at this model in late October, you would have gotten the sense that it would have made sense for you to start going long Ethereum, just because of the fact that you ultimately completed this 13. And um, one of the useful tools in technical analysis that I've heard over and over again is, the longer the base, the higher the space. And in this particular case, this was just a magnificent move and a magnificent area from a timing point of view to have gotten long the coin. So for me, if I'm looking at this longer term, it wouldn't surprise me if Bitcoin, Ripple retests its all-time high. Where was this? So I'm looking at the Kraken exchange, and I think back in 2018, Ripple went all the way to like $3.35. So there's no indication that it won't retest that all-time high, because really the only area of resistance we Ripple surpassed that this week, this 275 area. So uh, realistically, it wouldn't surprise me if we go back and retest this all-time highs. So this is actually why, I mean, personally, I actually started to go long the coin today, um, with the intention of scaling in for that ultimate $3 and what was it, $3.35 target. Um, and I'm happy to continue to buy it if we come back down to this 209 area again, because these are hidden levels of support that depending on in which on how the candle closes, that'll give me an indication whether I'm going to continue to dip buy, or I'm going to exit completely and potentially look the opposite way. So congratulations to all the Ripple bulls, because this was a magnificent move higher. On a percentage basis, you made more on a percentage basis buying Ripple than you did in Bitcoin. So um, congratulations. There's no indication that you need to start looking in the opposite way, especially because of how long uh, Ripple was just consolidating for almost 3 years. It was within this area of 40 cents to 60 cent range. So I don't anticipate Ripple coming back down to this 50 cent area. If anything, um, I can see it coming back down to test this $2 area before we move one leg higher. So I'm not too concerned at the moment. Okay, last but not least, let's take a look at Solana. Uh, Interestingly enough, while Solana went to all-time highs um, late last month, we've slowly come off of that level, and we're kind of consolidating in this area, but overall directionally, it's in fact it actually looks like a potential bull flag. So if we actually get the chance to come back down to this 200 level area, I'd probably buy that, just for the fact that again we're in an area where the DeMark indicator completed a 9. Potentially we have uh, 2 more weeks where, so long as the price closes higher than the low 2 bars prior, it should complete to a 13. We're on an 8 combo. So again, between 2 and 3 more weeks, uh, that's where I could potentially see Solana topping out. And you know, if I was gonna be long one coin versus the other, just looking at, again, just if I'm thinking about it from a from a risk reward standpoint, let's take a look. Let's see whose chart is stronger, Solana versus Bitcoin. So interestingly enough, Solana is actually on a relative basis, it's underperforming Bitcoin. So um, what I was going to say is I would probably tend to want to be long Bitcoin versus Solana, just because of and this actually supported that fact that because we pretty much topped out in Solana and came back down. Again, should we get the opportunity to buy back in at around $200, which is pretty decent drawdown from the 230 level. That's maybe where I'd want to get in, but especially because of the fact that again, the usefulness of the indicators is so helpful to understand just overall market direction, that we completed a 13 and we came back down, and we've been consolidating in this area on a relative basis. So um, it wouldn't surprise me if Solana continues to underperform Bitcoin, coming back down all the way to this what looks like this long-standing area of support going back to the beginning of 2024. And we're on a -1 count on a using combos, so potentially I could see Solana starting to break down and ultimately potentially go back all the way down here. But we'll see. This is definitely a coin that I'm not in personally. I started to enter into positions into Ethereum, Ripple. If I get the chance to, I'll buy some Bitcoin, but probably in and around this $90,000 level. Um, what I'll continue to do over the next couple of episodes and into the next couple of weeks is I'll kind of explain the the rationale for how the sequential and the propulsion and are used, and how you potentially want to use them to your advantage as a potential trader or investor. There are areas where you may want to step in to be a dip buyer, or depending on the count of the model, that may indicate, okay, it's time to take profits, or potentially start to look in the opposite direction. So in this particular case, Bitcoin, we're getting to the extremes of where I think we'll ultimately top out at which point that may be an area where I want to start shorting Bitcoin, but we'll see. um, you know I can't say with confidence right now that that's the right move, uh, because just look at these candles. Like, they're extremely bullish with significant volume behind them. It's hard to stop a train going in one direction if you're trying to be counter trend. So I don't necessarily want to play counter trend right now. I'd much rather be long the coins, just for the potential of continuation to the upside. Ethereum, like I mentioned, I'm starting to build a significant position in Ethereum, because I generally think that there's relative outperformance going into 2025. Um, with Ripple, I generally think that we're going to retest all-time highs sooner rather than later. I don't think we're going to necessarily get up there in a single shot. I think in a straight line, excuse me. You know, it, we've pulled back from the top here, and look, you know, this week we went up to 290. So you know, that was only 35 cents away from the all-time high. So it wouldn't surprise me if we kind of consolidate before we shoot up that next and final leg higher. At which point, you know, I'll reestablish my game plan then. But for the time being, I'm going to continue to add to Ripple. For Solana, I'm not interested in it right now. I think there are other better opportunities in some of the other coins. Um, I will keep an eye on it just to see the way in which we close Solana versus Bitcoin. If we breach this level in a particular way, then that'll give me indications to, you know, potentially start shorting Solana. Um, but obviously Solana had a beautiful move back in late 2023, all the way up to um, early January, and even into early March, right? That's where it effectively peaked for this particular move, and we've just been consolidating relative to Bitcoin since. If I take a look at Solana by itself, you know, yeah, like you know, again, I can't I can't continue to harp on how useful and effective this model is because look, when this model printed a 9 and 13, that was essentially the area for you to exit because we ultimately dropped from 200 all the way down to like 125. Yes, we consolidated for months and months, ultimately completing a 13 before we came back down, and then it was only in uh, you know, late September, early October, with coincidentally with the U.S. elections and ultimately Trump being the president elect, and where we saw that final that next leg higher, and you know we're consolidating right now. Um, we'll see if we come back down to this 200 level. For me, that would probably be the area that I'd want to potentially buy in at. But again, if I'm looking at where are which areas of the market can I generate the most amount of alpha? Um, you know, there are other coins in the space that are potentially more lucrative in terms of holding them for shorter or longer periods of time. But in this particular case, I'm not interested in Solana, and that's about it. So that's it for today's episode. If you like the content, please subscribe, like the video, enter any comments. You know, if there's any coins that you want me to take a look at to do some technical analysis on, utilizing the DeMark indicators, Ichimoku clouds, you know, I'd be happy to do that. Again, coincidentally, this $200 level, now that I'm looking at Solana, happens to unrelatedly be a support area using the Ichimoku cloud. So, um, you know, the way in which I look at the market is very different than a lot of your traditional traders. I would say that uh, my analysis picks up on from a timing mechanism when to get in, when to get out. You know, when to potentially know you're wrong in a trade to minimize losses faster than a lot of these other traders who don't have good risk management, who don't understand stop losses. But for me, these are the two coins that so well, at least Solana I'm not in, but for Ripple and Ethereum, these are the two coins that I'm bullish in, um, and that's about it. So thanks a lot. Again, please subscribe, like the video, let me know some comments. I'd like your feedback. What did you like? What you didn't like? What coins are you interested in me doing some analysis on? And that's it for now. Thanks a lot, everyone.